Today we're diving into ConocoPhillips, um, a company that's been around since 1875,
Wow.
almost 150 years in the energy business.
Yeah.
And ConocoPhillips is currently the third largest U.S. oil company.
That's right.
They operate in 13 countries across multiple continents. So it really begs the question,
Yeah.
is ConocoPhillips a legacy stock coasting on past success, or are they adapting and innovating to stay ahead?
It's a great question.
During this deep dive, we'll explore their financial performance, their recent acquisitions, and their position in the global energy market. We'll also analyze their valuation, consider the pros and cons of owning this stock,
Okay.
and delve into the critical area of ESG factors.
Yeah.
By the end, you should have a clearer picture of whether ConocoPhillips is a good fit for your portfolio or not.
Well, to understand where ConocoPhillips might be headed, it's helpful to first understand where they've been. I mean, their history is really intertwined with the evolution of the energy industry
I
itself.
see.
From their early beginnings in the late 19th century, through mergers and acquisitions and shifts in global energy demands, they've consistently adapted to remain a major player.
Right.
But the question now is, can they adapt to a future that's increasingly focused on decarbonization?
Okay, so let's shift our focus to what ConocoPhillips does today.
Sure.
They're an energy company, but what exactly do they focus on?
Yeah, so ConocoPhillips is primarily focused on hydrocarbon exploration and production.
Okay,
They're in the business of finding and extracting oil and natural gas.
got it.
This is a key distinction because they've intentionally moved away from downstream activities like refining and chemicals.
Interesting.
They've streamlined their operations to concentrate on the upstream segment of the energy industry.
So they're not running gas stations,
Exactly.
but they are involved in finding and extracting the oil and natural gas.
Yeah.
And they're doing this globally.
Yes.
What can you tell us about their global reach and the types of resources they're targeting?
So their operations span across several continents, including North America, Asia, Australia, and Europe.
Wow.
They're involved in both conventional and unconventional oil and gas plays.
Okay.
This includes oil sands in Canada, a resource that presents both opportunities and environmental challenges, and liquefied natural gas, or LNG projects, internationally, which could be a key part of their strategy for navigating the energy transition.
Oil sands and LNG, those definitely sound like areas with both potential and controversy.
Where do you believe?
Let's get a sense of their financial standing.
Okay.
You mentioned they're the third largest U.S. oil company.
Yes.
What does that mean in terms of their market capitalization, and how do they compare to their competitors?
So ConocoPhillips currently boasts a market cap of $125.61 billion USD,
Okay.
which makes them the 127th most valuable company globally.
Wow.
This puts them ahead of smaller players like Hess with a market cap of $40.22 billion and Marathon Oil at $15.97 billion. However, they're still dwarfed by the industry giants ExxonMobil and Chevron, which have market caps of $467.63 billion and $256.45 billion, respectively.
Okay.
This gives you a sense of the scale at which ConocoPhillips operates, but also where they fit within the competitive landscape of the global energy market.
Those are some impressive numbers, but market cap is only one piece of the puzzle.
Yeah,
For investors, financial performance is key.
right.
Let's talk about their dividend yield and their approach to rewarding shareholders.
Okay, so ConocoPhillips offers a dividend yield of 3.21%, which is considered respectable in the current market environment. Their annual dividend payout is $3.12 per share.
Okay.
What's notable is their commitment to returning cash to shareholders through both dividends and share buybacks.
I think.
This two-pronged approach aims to provide investors with both a steady income stream and the potential for stock price appreciation.
A dividend yield of 3.21% and a commitment to share buybacks certainly catches the attention of income-seeking investors.
It does.
Can you elaborate on the scale of their shareholder returns and how those have been trending recently?
Sure. So in 2023 alone, they paid out a total of $5.6 billion in dividends and repurchased $5.4 billion worth of shares.
Wow.
This demonstrates a substantial commitment to returning value to shareholders.
Yeah.
Their most recent dividend payout distributed on November 8th, 2024 was $0.78 per share.
Okay.
This consistent return of capital can be a significant factor for investors evaluating ConocoPhillips as a potential long-term holding.
These shareholder-friendly actions certainly make ConocoPhillips seem appealing.
For sure.
However, we need to consider their innovation pipeline as well.
Right.
In the shifting energy landscape, are they making investments to secure their future, particularly in the transition towards cleaner energy sources?
That's a crucial question.
Yeah.
And while they haven't explicitly rebranded themselves as a clean energy company, their activities suggest they're positioning themselves for a changing energy future.
Okay.
Specifically, their expansion in the LNG market signals a strategic move towards a less carbon-intensive fuel source compared to coal. Their 2024 capital budget, set between $11 billion and $11.5 billion, further underscores their commitment to growth and potentially the development of new technologies or projects related to cleaner energy solutions.
The capital budget of that magnitude certainly indicates they're serious about investing their future.
Yeah.
Now, let's turn our attention to ConocoPhillips' valuation.
Okay.
They have a PE ratio of 12.47.
Right.
For those who might not be familiar with this metric, can you explain what a PE ratio is and what this specific number tells us about ConocoPhillips?
Sure. The PE ratio, or price-to-earnings ratio, is a fundamental metric that compares a company's stock price to its earnings per share. Essentially, it provides a snapshot of how much investors are willing to pay for each dollar of a company's earnings.
Got it.
A higher PE ratio often indicates investor optimism about future growth prospects, whereas a lower PE ratio might suggest undervaluation or concerns about future earnings.
Okay.
In ConocoPhillips' case, a PE ratio of 12.47 is relatively low compared to the broader market average. This could indicate that the market is undervaluing their potential,
Right.
or perhaps reflects concerns about future growth in the oil and gas sector as a whole.
It seems there's a lot to consider here.
Yeah.
They're making moves in potentially forward-looking areas like LNG, but their valuation suggests some caution is warranted.
It does.
Before we weigh the pros and cons, let's explore another aspect of their growth strategy, their recent acquisitions.
Okay, so ConocoPhillips has been quite active in acquiring assets, particularly in the Permian Basin,
Okay.
one of the most prolific oil-producing regions in the United States.
Right.
In 2021, they acquired Shell's Permian Basin assets for $9.5 billion, followed by the acquisition of Concho Resources, another major player in the Permian, for $9.7 billion.
Oh.
These strategic moves significantly expanded their footprint in this key oil-producing region, signaling their intent to become a dominant player in the Permian.
2 major acquisitions in a single year is a clear indication of their strategic focus on the Permian Basin.
Yeah.
It seems they didn't stop there, though.
They didn't.
Weren't there even more recent acquisitions?
Yes. In November 2024, ConocoPhillips acquired Marathon Oil for a substantial $22.5 billion. This acquisition further consolidated their position in the Permian Basin and solidified their standing as a major force in the U.S. oil and gas industry.
So ConocoPhillips is clearly making a bold play in the Permian Basin.
It seems so.
What does this aggressive growth strategy tell us about their overall economic impact and their place in the global energy landscape?
ConocoPhillips undoubtedly holds a significant position in the global oil and gas market.
Okay.
Their operations in key regions like Alaska, Canada, and now especially the Permian Basin make them a crucial contributor to U.S. energy production. Beyond North America, their international presence is notable.
Okay.
They've secured a stake in the Northfield East expansion project with Qatar Energy,
I see.
one of the world's largest LNG projects.
Wow.
This involvement in a major LNG project highlights their strategic intent to participate in the growing global demand for this potentially less carbon-intensive fuel source.
It sounds like they're not just focused on U.S. production, but also making calculated moves to become a part of the expanding global LNG market.
That's right.
However, we can't overlook the elephant in the room, ESG factors, which encompass environmental, social, and governance concerns.
Absolutely.
This is an increasingly critical area for investors today.
It is.
ESG considerations are top of mind for many investors.
For sure.
And ConocoPhillips faces a particular challenge in this realm.
Yeah.
They were ranked as the 14th most polluting company globally in 2019, a fact that weighs heavily on their ESG profile.
Definitely.
That ranking is certainly alarming.
It is.
Can you break down what that means in practical terms?
Sure.
How much are they actually contributing to global greenhouse gas emissions?
Well, data reveals that ConocoPhillips was responsible for 0.91% of global industrial greenhouse gas emissions
Okay.
between 1988 and 2015.
Got it.
To put that in perspective, this represents a significant portion of the total emissions generated by human activities. It underscores the challenge they face in reconciling their traditional oil and gas operations with the growing demand for environmentally responsible practices.
So their expansion into LNG, while a step towards cleaner energy, doesn't erase their overall impact on greenhouse gas emissions.
Unfortunately not.
This brings us to a crucial question for anyone considering ConocoPhillips as an investment. What's the outlook for their stock?
Okay, so Zacks Investment Research, a reputable firm, has given ConocoPhillips a hold rating,
Okay.
suggesting that they expect the stock to perform in line with the broader market in the coming months.
Right.
Their projections indicate a potential for challenges in the near term,
Mm.
with expected sales growth for 2024 at negative 2.93% and a projected EPS growth for the coming year at negative 23.62%.
Wow.
These projections might raise concerns for investors seeking high-growth opportunities.
A hold rating coupled with negative projected growth certainly requires careful consideration.
It does. As we transition into the second part of our deep dive into ConocoPhillips, let's synthesize the information we've gathered and explore what it means for you as an investor. We've discussed their history, their operational focus, their global reach, and their financial standing.
Yeah.
We've also touched on their strategic moves into LNG and their somewhat concerning ESG ranking. Now we need to weigh the potential benefits and risks of investing in ConocoPhillips stock.
We've certainly uncovered a lot of ground already, but the key question remains, is ConocoPhillips a worthwhile addition to an investor's portfolio?
Right.
To answer this, let's delve deeper into the potential pros and cons.
All right.
Starting with the positives. What are the arguments in favor of buying COP stock?
Well, one of the most compelling arguments is their consistent track record of returning value to shareholders.
Okay.
Their dividend yield, currently at 3.21%, combined with their substantial share buyback program, makes them attractive to income-seeking investors. Remember, in 2023 alone, they returned a total of $11 billion to shareholders through these two mechanisms.
Right.
This commitment to shareholder returns is a strong point in their favor.
Their dedication to returning value to shareholders certainly seems like a major plus.
It is.
What else stands out as a potential positive for ConocoPhillips?
Their strategic move into the LNG market is another factor to consider.
Okay.
As we discussed, LNG is projected to play an increasingly important role in the global energy mix. ConocoPhillips is positioning themselves to capitalize on this potential growth by expanding their LNG operations, including their participation in the massive North Field East project in Qatar.
Right.
This forward-looking strategy could appeal to investors who are seeking companies that are adapting to the evolving energy landscape.
Their LNG expansion is a definite plus, especially considering the global shift toward cleaner energy sources.
For sure.
Are there any other positives to highlight before we address the potential downsides?
Their aggressive acquisition strategy, particularly in the Permian Basin, is worth examining further.
Okay.
While it carries inherent risks, it also presents potential benefits. Their recent acquisitions, including Concho Resources and Marathon Oil, have substantially increased their production capacity and reserves in a region known for its cost-effective production. By consolidating their presence in the Permian Basin, they've positioned themselves as a dominant player in a highly productive and profitable area.
That increased scale and market share in the Permian Basin could definitely be a significant driver of future profitability.
It could.
However, you mentioned that this aggressive acquisition strategy also carries inherent risks.
It does.
Could you elaborate on those risks?
Of course. The most notable risk is the substantial debt they've incurred to finance these acquisitions.
Okay.
High debt levels can expose a company to greater vulnerability, particularly in an industry as cyclical and prone to price fluctuations as oil and gas.
Right.
This increased financial leverage could limit their flexibility to respond to future challenges or invest in new opportunities.
So their debt levels are something investors need to monitor carefully.
Yep.
What other concerns should investors consider when evaluating ConocoPhillips as a potential investment?
The most prominent concern, in my opinion, is their environmental track record.
Okay.
As we discussed, they were ranked the 14th most polluting company globally in 2019.
Right.
This ranking raises valid concerns for ESG-focused investors and could expose them to various risks, including regulatory scrutiny, investor pressure, and potential reputational damage.
Yeah.
While their expansion into LNG is a step towards a less carbon-intensive fuel source, their overall environmental impact remains significant.
Their ESG performance is definitely a point of contention for many investors.
It is.
How does their stock forecast align with these concerns and potential risks?
Well, the hold rating from Zacks Investment Research, coupled with their projected decline in sales and earnings for the coming year, paints a somewhat cautious picture. Investors seeking high growth may be wary of these projections, particularly when considering the cyclical nature of the oil and gas industry.
It seems we've identified a mix of compelling pros and significant cons. As we move into the final part of our deep dive, we'll attempt to synthesize this information and address the ultimate question. Is ConocoPhillips a buy, a hold, or a sell? We've spent this deep dive exploring ConocoPhillips, examining their history, financial performance, strategic acquisitions, and their position in the global energy market. Now it's time to tackle the central question. Should you buy ConocoPhillips stock?
Well, we've seen that ConocoPhillips has a long history in the energy sector, and they offer a strong dividend yield coupled with a commitment to returning value to shareholders through buybacks. They're also making strategic moves into the LNG market, which could be a significant growth driver in the coming years.
However, we can't ignore the concerns surrounding their environmental record and the less-than-stellar stock forecast. So where do we land on this complex investment decision?
ConocoPhillips presents a classic dilemma for investors today. It embodies the tension between traditional energy investments and the increasing demand for companies that prioritize ESG principles. Their commitment to shareholder returns and their strategic move into LNG are certainly attractive features.
Yet their environmental ranking and the uncertain outlook for the oil and gas industry raise valid concerns. For our listeners who are trying to decide whether to add ConocoPhillips to their portfolio, what key factors should they be considering?
I think the most important factors are their investment timeline and risk tolerance. For income-oriented investors with a long-term perspective, the dividend and buyback program might be enticing enough to outweigh the risks. However, investors with a shorter-term focus or those who prioritize ESG factors might find ConocoPhillips less appealing.
It seems like there's no easy answer here. The decision ultimately hinges on each investor's individual circumstances, priorities, and assessment of the potential risks and rewards.
Exactly. ConocoPhillips is a company at a crossroads. They're attempting to balance their legacy as a major player in the traditional energy sector with the need to adapt to a future that demands cleaner energy solutions. Whether they can successfully navigate this transition remains to be seen.
This deep dive has provided a comprehensive look at ConocoPhillips, highlighting both the potential opportunities and the inherent challenges they face. We hope this information equips you to make an informed decision about whether this stock aligns with your investment goals and values.
We encourage you to share your thoughts on ConocoPhillips and their future prospects in the comments section of our YouTube channel. We're always eager to hear your perspectives. While you're there, let us know what other companies or topics you'd like us to cover in future deep dives. Until next time, keep learning, keep exploring, and keep diving deep.